Good morning, good afternoon, good evening, wherever you are, whenever you are. Welcome to a new Breakout Solutions Bitcoin technical analysis video coming to you live like every single Monday to give you the latest and greatest Bitcoin technical analysis. So let's dive straight into the charts, shall we? All right, so Bitcoin is finding resistance at $25,200. If we look at the past, we can see kind of why that is the case. So the wick that we had down here due to, I believe this was the Russia-Ukraine war collapse. And then obviously we had a further collapse from other contagions. But you can see that this was resistance back on 15th of August, and now pending, it's becoming resistance once again for us. So what can Bitcoin do? Well, a lot of people do believe that Bitcoin is now ready to roll on over to the $28,000 mark, but I'm not too sure about it personally. This is technically kind of a no trade zone apart from a short trade. And the reason being is because like we're at this resistance line. A lot of indicators are showing bearish divergence. So we've got the RSI showing two drives of bearish divergence. We see the stochastic RSI daily in the overbought territory, and the moving average is looking to cross over. We've got the MACD, even though we have four green histogram candles, it looks like, and it's very likely that we're going to create a divergence here as well. So if I just take it from the cross, let's just say it doesn't cross till here, we're going to see a bit of a divergence here because we've made a higher high in price, and there'll be a lower high in regards to the moving averages moving over. And then we have market cipher. We can see we have this clear anchor wave, and we've got this trigger wave right here, which is another point of divergence. Let me just redo this. Let me move that there. If I draw a line from here to here, all right, because you can kind of see that the wave is starting to curve around like it wants to create that trigger wave. And we've also, once again, as I spoke about, we've created a higher high. Even if I was to show you most indicators, we can see that there's clear divergence. So this is the one thing that's got me thinking this is a kind of a no trade zone. The only trade that you should be thinking about here is short trade with obviously a stop loss just above obviously the local high, which I think was 25,285. Right, so this is on Bybit. Depending on what exchange, it might be slightly, plus or minus 50 to 100 bucks. But yeah, we've been creating some divergences, pushing up. Now let's have a look at some fixed range volume profiles to see what's going on. So we can clearly see we have a value area high of this entire sideways range of about 23,000. The point of control is all the way down here at 19,100, and the value area low about 18,000. So if Bitcoin does manage to break out from this this zone, where could we see first resistance? So we've got the 236 Fibonacci retracement at 28,121. Now that price also is interesting for me because it's very close to where we found support during the 2021 bull market. We can clearly see we had one touch here, two touches here, and then 1, 2, and 3 other close touches that weren't actual touches, but they were very close. So you can see that that line is at 28,800. All right, so basically between 28,121 and 28,829, this is where I believe we're going to see some resistance if we do break through. That's going to be kind of my next line of support and resistance. Now, if we look at this trading range that we're in before we dump down, we can also see the value area low of that trading range is lined up with 28,829. So that's why we have a few points of confluence around that zone. So I am personally looking to short this area right here if Bitcoin does come into this zone. This is a short opportunity. Right now, I wouldn't be shorting or longing, even though I do have a long set from 17,300. Which I'm hoping to ride and add to slowly but surely as we, move into the next bull market. So yeah, that's kind of what I'm seeing on the charts. Now, if Bitcoin is to sort of come down, you can obviously we should hopefully find support around 23,000. But let's have a look at some Fibonacci retracements. We have the 236 in line with the value area high. We have the 382 at 21.5, where we also just recently found some support when we had that pullback. And we've got the golden pocket around the point of control. So we really have three zones where we could basically, long Bitcoin with some really tight stop losses right here. And there's not much confluence for me apart from a couple of the wicks here on the 0.5, but we could also basically put another box here, right? So this would be another point of support. And then obviously right here, there's a lot of confluence, golden pocket, point of control, value area low. These are three areas where I think you could be able to get a scalp long from. So you could buy here for a quick flip. We should see some support at each of these major price zones. That's if Bitcoin once again fails to sort of break. It's already had two drives of breaking this, and the longer we sort of spend here, the greater the chance of getting rejection. A lot of people like to think, the more times we tap resistance, the easier it is for breakthrough. Well, at the same time, bears think, if bears have got a sell wall here, it's also going to discourage a lot of people thinking, hey, I'm buying at the local high. This is probably not a very smart time to buy because we could obviously retrace. It's better to wait for a pullback. Everyone always says buy the dip, buy the dip. Well, we haven't really dipped too much apart from what we did last week where we dipped. Let me just redo that. We dipped. All right. It did not stick. There we go. It dipped 12%. So that was a decent pullback. That's a pullback you kind of usually see in a bull market. I'm not saying we're in a bull market, but I do think that I'd like to see a greater pullback, next time, something around the 20 to 30% mark. That's where those are the types of pullbacks where I'm sort of dollar cost averaging these small ones. I was hoping we would come down to around about 20,500 because we've got a CME gap down here, but that wasn't the case. That CME gap is obviously still there, which means that in the future we might see something like a bit of a flash crash, to that price point. So look out for 20,500, 400 to be a point of interest in the future if we do sort of break down. But look, things are looking still fairly bullish. It looks like Bitcoin wants to try higher, but for me, as I mentioned, daily we're in the overbought territory, the weekly overbought territory. So even if I just draw out some vertical lines each time that we have the moving averages crossing over when we're in the overbought territory. All right, we'll just do a few iterations. I have done this before, so those of you that have missed this in the past, you can basically see this now, and this is why it's not a good time to long. Even if you do miss the long opportunity, there's always going to be the next trade, and I think that we're due for a decent correction soon. Yes, the stochastic RSI can stay in the overbought territory for a long period of time, but let's have a look at prior iterations. So when we crossed over, we had that 11% sell-off. When we had a crossover last time, we had a huge sell-off. When we had the crossover, we had another huge sell-off. Here, we sold down again. What was this one? Because we had a continuation from here. So that was about 25%. Here we had the cross, but looks like we didn't, come down to the following week, and that was 31%. This one wasn't that great during the midst of the bull market, so we crossed over here, but let's go from that week to that way. That's 14%. So that's very similar to what we sort of experienced last week. Here we go again. So this one was 18%. This one, you know, at its lowest, we're looking at 12%. This one was huge, and this one obviously was just a very slow, gradual decline. So this is the reason why right now I'm waiting for a pullback. On the macro scale, on the weekly scale, things are way too heated. But I mean, you can see here we spent a bit of time in the overbought territory, even though it wasn't above the 80th percentile. This was the last iteration that right here on the stochastic, where we spent a fair bit of time. If I zoom in on that, and also if I zoom in on this, we can see that from cross to cross, that was the 16th of November to the 4th of Jan. So basically 6 weeks, we were able to stay overbought for 6 weeks. So we could see the exact same thing this time around, where we stay, you know, 6 weeks. So let's do 6 weeks. So we're looking at, yeah, that's about it. 20th of March. All right, maybe even the week before, 13th of March, that's 6 weeks. So we could still, you know, Bitcoin could continue on for at least 1, 2, 3, 4, and that would line up to that similar time right here. Let me go to the BLX chart to see if I can see another time where, okay, you can see here, here's another time where Bitcoin stayed in the overbought territory for a long period of time. And this was also during the bear market, right? This is the bear market rally. So we could pose a similar thing as that. So let's have a look at what this time frame was. So this was 70 days, so that it was 7 weeks. All right, so 9 weeks, 70 days, 9 weeks. All right, so we're only in, what week are we in? We are in week, let's go, I'll just take it from here. So we're basically in week 2 of a possible 9. We could have another 7 weeks. I don't think we'll have 7 weeks, but let's take the average from the last one that I said. So 6 weeks and 9 weeks. You know, even if we go another 7 weeks, that leads this bear market rally up until, you know, the end of March, basically end of March, early April, April Fool's. April Fool's was the time that I thought that we would start this current rally that we're having, and it's come a little bit earlier than I expected. But yeah, I definitely think that there's a lot of people in, like, feeling bullish about the market again, but this is where sentiment can make people do silly things. And, you know, a silly thing right now would be longing or buying Bitcoin right at this point. I do think that at some point in time in the future, Bitcoin is definitely going to come back at this price point. So if you were going to buy Bitcoin here or long Bitcoin here, this for me would just be a quick flip. I'd be whatever I buy here or long here, I'd be turning over very quickly between here and $28,000. As I mentioned, the weekly stochastic is just a really good indicator. It's really simple, that you don't need to be a rocket scientist to see that, hey, we're overbought. And I just showed you the last however many iterations over the past few years, all showing a sell signal or a sell-off occurring pretty much after the cross has occurred. Now, even though we've had a cross, and yes, we're going sideways and the Bitcoin price hasn't sort of dumped from here, for me, it's telling me that we're exhausted. The rate of which we've gone up has exhausted, and it's only a matter of time. It could be a week, 2 weeks, 4 weeks, but this thing is going to roll over. Obviously, I'd prefer it sooner rather than later. But right now, as I said, I've just pointed out all these vertical lines are showcasing when the stochastic RSI moving averages crossover in the overbought territory, which we're in. The overbought territory is when you're over the 80th percentile. So you can see these numbers on the side here, 80, 40, 0. Let me just remove that so it gives you guys a bit clearer. You can see that when we're above the 80th percentile, that is overbought. So I didn't put any lines here for this section, but all the previous iterations where we're above that 80th percentile, Bitcoin has had a decent retracement. This is the only one where it happened the week after. Okay. Maybe I got even my lines wrong. Did I get my line wrong? Yeah, I did get my line wrong. There you go. Boom. So that line marked, signaled the top. Then we had a retracement. This one, we crossed over, right? We had the sell-off, but look, we've had a bullish cross back over. So the moving averages have crossed back over into bullish. So what I'll be looking for is once that blue crosses back down below that orange line, we're probably going to get a sell-off. So it's any week now. That's why right now, this is for me like a little bit of a no trade zone. So guys, just be patient and pick your spots when buying and selling Bitcoin. So we've got a few comments. Let's have a look. Robot, hi, how are you? Nice to meet you. I think you're a first time here. Haven't seen you before. Chan AI, what would be the near fundamentals driving Bitcoin price up? Lots of things. So basically, there's limited supply. A lot of people know that it's a hedge against inflation. More hedge funds, venture capitals are now exploring the investment opportunity into digital assets, and Bitcoin is obviously the godfather. It's the one that's most well known. Its volatility is a lot less than most altcoins. That was seen by this year's retracement as an example. So this bear market only got us a 77% retracement. In previous years, we've at least seen 85%. So I know 7% might not seem like a lot, but I do believe that as price continues over the many decades with Bitcoin, we're going to see less volatility. So bear markets aren't going to be, they're not going to be as big as 77%. I think that each year it's going to be smaller and smaller because people are going to see the value of it. So therefore, the floor price is always going to get higher and higher. And I think that because the diminishing returns, because it's such a large asset comparative to other altcoins, we're going to see a very slow growth and also a slower and a smaller retrace during bear markets. So that's what I believe is driving Bitcoin up. It's more so the scarcity. There's only 21 million of them, and got to get in whilst it's hot. Rowboat, 15th of March, CPI, FOMC 23rd could get that volatility in confluence. Yeah, definitely. Let's go. Next FOMC meeting. I think you said it. Is it March 21, 22? So just a week early, but yeah. March CPI for 23rd. Yep, no, you did get it right. Yeah, definitely. It's going to be quite interesting. It's always volatile when the Fed talks. So yeah, definitely, I definitely see that. But right now we've had even if I just turn on one of the most simplest trading indicators, it's called TD sequential. Basically, you'll see usually nine green candles, followed by a 1 to 4 candle retracement when we're in a bull market. Then we go 1 to 9, 1 to 4, 1 to 9, etc. So I'll just give you a quick little example of some in the past. Here we go. Right here. All right, so we had 1 to 9 candles to the upside. We had 1 to 4 candle retrace. We didn't hit the 9 on the next one, but we had the 4 candle retrace. Then we had the 1 to 9 up. We had 2 candles sort of sideways, which counts as sort of 2 candles down. Then we went another 9 candles to the upside. Then it also does the reverse. Okay, so you can do the reverse. So when you're in a bear market, you can do this where you have 1 to 9 candles on the way down, 1 to 4 candle correction to the upside. See, we've got 1 to 7 there, 1 to 4, 1 to 6. So this indicator is pretty good. It's not one that I use quite regularly. It was one that I used to use quite a lot. But we can clearly see we are on the 8th day of keeping this cycle, right? So this will top out at 9, and usually you'll see a bit of a retracement. So on the weekly, we're at week 8 of 8 consecutive weeks, which basically tells me we're close to the top. We should have one more week of green candle. Can they give us a nice little pop to 28,000 and 26,000? And on the daily as well, it looks like the count reset, which is unfortunate. I was expecting this to be a 6, and then that's a 7, and then 8, 9, but looks like the count restart. We can see here we had 1 to 9 candles to the downside, and we've had the 1 to 5 candle pushed back to the upside. So this is not really, like I said, an indicator I use anymore, but it's good to sort of check in on once again to see how many consecutive days were we moving to the upside, same to the downside. I hope that makes some sense for you guys. All right, guys, I think that's basically it for today. I think I've covered everything that I want to sort of cover. So right now, I'm seeing bearish divergences everywhere on a lot of my indicators, which makes me think that even if we do break through this, we're close to a decent correction very soon, because this wasn't enough to reset a lot of the indicators. Right now, I'd love to be able to get a decent pullback so I can add to my swing long position, but I can't have everything. I track other YouTube primal. I track other YouTuber primary Elliott wave counts, and yes, we could be at a wave 5 for most downside. Yeah, I don't use Elliott waves personally because I'm more of a day, a swing trader, so I don't really care too much for them. But I've seen people use them, and I think that they work out well. But I'm not too much of a wave person myself. All right, guys, I think that's it. I've been going for about 20 minutes. So thank you all for watching. If you enjoyed the stream, make sure you like, subscribe, and turn on all notifications. So as I said, right now, for me, we're overextended. A lot of bearish divergences have presented themselves. Yes, we can get another push to the upside, but that would just make me think that the pullback is going to be even more severe. If we pull back from here, there is the potential that we come down at least to the point of control, and then we would have a very beautiful inverse head and shoulders, which would give us an amazing target to the upside. Let's have a look what the target to the upside would be if we did have this inverse head and shoulders. We're looking at 42, which is pretty good, 42,000. But we need to come back down, create the right shoulder, and then that's a definite possibility as well. All right, guys, enjoy the rest of your Monday. Have a great afternoon, or actually no, have a great morning, afternoon, or evening, wherever you are. And I will catch you guys tomorrow for the DC news update. Bye for now.